Getting your money out of an LLC. Now, this is not an uncommon problem. At some point, if your business is done well, you may want to pull money out of your LLC. Now, you might be taking some money out periodically. Of course, all of us have day-to-day expenses, things to keep us alive. And we've talked before on the channel about how you really want to separate the business and the personal. So if you don't have a ton of wealth accumulated on your personal side and you're working in the LLC every day and don't have another job, you're of course going to have to eat, pay your rent, pay your mortgage, right? And of course, those are going to be personal expenses, not necessarily business expenses. So you're going to have to get money out of your business in some way, shape, or form to pay these bills. And if you're getting successful, at some point, you may want to take money out for that as well. So there's a lot of reasons why you may want to get money out of your LLC. And today we're going to talk about that. Mechanically, it's generally very simple. The planning around it comes around the tax and accounting. And I'm not here to give you detailed tax advice. I'm here to talk about some of the basics from a legal standpoint, a little bit from an accounting standpoint on how to get money out. But then you can go talk to your advisors, really run some projections. That's the way this works the best, is to get a spreadsheet out, maybe get the tax software out, and figure out how much to take out of there. Now, depending on how you're set up, it's going to affect how the money comes out. A lot of times, if that LLC is taxed if it's a single member and it's taxed as a disregarded entity, or if it's a partnership, there may be no actual tax on taking money out. And so that's a nice thing, right? But of course, it lowers the amount of assets available. Now, if for whatever reason your company has been set up to be taxed as a corporation, then we start getting into some different implications, particularly if it's set up as a C corporation, because that may be a dividend. Now, remember, we're talking about an LLC here, but your tax accountant has some flexibility here. Your tax accountant, tax lawyer have some flexibility here to do some planning with you and maybe have it taxed a little differently. So if you're in one of these other buckets, you may be in a situation where you can pull the money out and you may have to pay additional tax on that. The bigger thing to think about is how do we want to do this from an asset protection or liability standpoint, right? So we have really two sides of the coin here. We have the tax and the income tax side and the planning for that. And then also we have the planning for how do we do this legally in a compliant way? How do we protect our assets and how do we make sure things are okay? Now, if we've done our work here and you've seen some of our other videos, there's a firewall between you and the LLC that should be built, right? And these should be two separate legal entities. The LLC has assets and liabilities, all titled in its name, presumably, and you have assets and liabilities, presumably also titled in your name. And the two are not overlapping, right? It's either clearly an LLC asset or it's clearly a personal asset, clearly an LLC bank account or a personal bank account. And so stuff needs to go between the two. Well, we need to respect this firewall when we're moving stuff back and forth. And that means legal formalities. You can't just, pay your mortgage with your LLC bank account, right? You're going to want to respect that division between the two. And that means the assets need to come out of the LLC to your personal account, usually through a distribution. So the most proper way to do this generally is to have the LLC, presumably we're talking about distributing cash or cash equivalents. So that money sitting in a bank account in the name of the LLC, and the LLC actually writes a check to you personally saying this is a distribution. You could also do this by a wire transfer or an ACH or other means. There is a real benefit to using an actual paper check because you have a very clear documentation trail, but you can use notes or other ways of documenting what's happening. The money comes out of the LLC and goes to you personally, then you deposit in your account. Now, there's a couple of things on the LLC side that need to be accomplished to make this function correctly. A big one on the LLC side is that you need to make sure that that's set up correctly and authorized, right? So that LLC is a separate legal entity. Now, your LLC agreement or operating agreement, hopefully you have one of them, is going to probably have some language around this. And you're also going to have a state statute Now, in general, what that state statute is probably going to say is something to the effect of, you can distribute money as long as there's enough money left in your LLC to pay your assets and pay your liabilities and contingencies, etc. So you need to go check your specific state statute on what that standard is and make sure you comply with it. You can't take money out if you owe it to somebody else. If your LLC owes money to creditors, you can't distribute the money to yourself and then go back to the creditors and say, hey, we're out of money. And so if you're in that kind of situation where money's tight and you have a situation where your liabilities might exceed your assets in your LLC, you really need to slow down, pump the brakes, and really do a deep analysis. If it's clear your assets greatly exceed your liability, you're probably not going to have a problem with these types of state laws. So you need to do the analysis, make sure you comply, and then you probably want to build a documentation trail. Documentation trail would be, we the managers, assuming you have a manager-managed LLC, have reviewed this. We're going to make a distribution. Here's the distribution amount. It's going to not put us in trouble with the statute, and we're sending that out. And so they're going to act. The manager's going to review things and approve the distribution. You're going to make sure it complies with the law. You're going to make sure it complies with the LLC agreement, and then the money's coming out. And so that's one good way. Now, longer term, you may want to look at your distribution rates. You may want to set up, kind of a quasi-salary. Some partnerships in particular pay, a quarterly or monthly draws to the partners so that they're getting a little regular distribution so they can pay their bills and keep up with life. You may want to do periodic bonuses, quarterly, yearly, based on how the business is performing. All of this, the money has got to be flow out of the business, but it's got to be done so in a way that complies with law. So you need to get some legal analysis around your LLC agreement, around your statute, build the structure around it, because it's going to save you problems later with potential liability. It's going to help protect that asset firewall, and it will keep things flowing smoothly from a tax perspective too. Questions or comments that are general in nature, feel free to drop them below. Don't put anything confidential. Other people can see your comments, so don't ask specific questions about your very specific situation. But if you have general questions or ideas for future videos, always appreciate it. Consider subscribing to our channel. If you're a new subscriber, say hi, let me know. And let me know if you want to join me. Please join me for other videos. Let me know if there's specific topics for videos you'd like me to cover in the future. All right, thanks for tuning in, folks.